not locked in here with you. You're locked in here with me.
Hello, everyone, and welcome to another edition of Real Estate Realities with the Rebel Broker. My name's Robert Whitelaw, and I am the Rebel Broker. Licensed real estate broker in the state of California. Member of the National Association of Realtors. But please, don't hold that against me. I am so happy you have chosen to join me today. Welcome to December 31st. It is New Year's Eve. This is it, man. We are on the doorstep of a new year. And, you know, I have interesting conversations with people. You know, why do we make such a big deal about New Year's? Why is that the time to do? Well, because it's a milestone, right? Things change. The number we write on our checks is no longer going to be the same, right? I think another really good time to do this kind of stop and take stock thing is your birthday, right? Because that's your big change, where your actual age number changes. You know what's funny is I often find that the people who will first talk about not reviewing their year or not planning based on some arbitrary selection of the new year, which isn't arbitrary because it's the new year, are folks who really have trouble achieving their goals in general, right? Why come up with that excuse? I'll tell you what, here's the agreement I will make with all of you out there who share that opinion. Pick a freaking day. Maybe you are a wickedly passionate American. Make it the 4th of July. Pick a freaking day. The bottom line is you got to put your life into manageable chunks and figure out what you're going to do, what you did, what worked, what didn't work, and move forward from there. And hopefully, it's supposed to be a growth thing. You know, it's not necessarily just beating yourself up. It's looking at, hey, this succeeded. I got what I wanted out of this particular scenario. I should make note of the things that worked well there. After I do an escrow, for instance, I do what I call a post-mortem. And I do a quick review. What worked? What made the process work well? What made it not work well? And what could I have done? What did I do right? And what could I have done better to make it work better? I'm someone who dedicates myself to the mission, right? And the mission is my client wants something. They either want to get that house sold for the highest amount of money in the shortest amount of time, or they want to buy that house and get their butts in there in a convenient time frame. That's the mission, right? So I look at what worked and what didn't. And frequently we discuss those situations here on the show. I talk to you about the things that I learned. And so often, and one of the other weird things is real estate agents really, I'm frequently disappointed in the level of ability of real estate agents to reflect in this way. What's really shocking is the interactions I have with quote unquote top producers, right? Top producers are not necessarily the best people to help you achieve your goal in real estate. If you're a broker looking to hire an agent that will make you the most money, you know, someone who closes a lot of closes a lot of transactions, that's great. But when you use the word someone in there, you're not usually talking about the agent. Remember, we've talked about this, the team thing, right? So, where the heck was I going with this? The bottom line is, can you tell I've had coffee? Here you go, proof. I've got my cup right here, so I'm fully caffeinated this morning. The goal, it's not and if you are super like not into critiquing yourself, then just critique yourself for yourself. Doesn't mean you have to share it with others. I mean, I frequently am a one-man show here at my real estate business. I will occasionally hire folks in the background when things are getting stressful or there's a lot going on. But even then, it's just for them to fill in stuff. And this is important for the agents listening right now. If you are not owning every step of the process in your client's transaction, you are not doing your job. You should be able to answer a phone call from any one of your current clients and give them a complete, accurate, up-to-the-minute update on what's going on with their transaction. If you have to talk to Judy, who does your your transaction management, or you need to talk to whoever else, right? And I know there are some teams out there that really make a lot of money, but I also noticed that if you judge them by the stats we should all judge agents by, they're not real good at their job. And we've talked about those numbers before. I'm not going to get into that. We're already 5 minutes in. I'm hoping to not make this a super long show. I want to hit some interesting tidbits. What we're going to hit is, because we are at that point where and I've mentioned this before, this is the time of year to get projections, right? What's going to happen in 2020? So I've got one from a website called Calculated Risk. They've got some interesting data here that's a nice retrospective on what's happened over the last couple of years, and then expectations on the upcoming year, which I actually think this makes a lot of sense. A couple of other little tidbits, though, before we get into that I wanted to share. This is from Housing Wire. Single-family rentals are getting more expensive. Here's another interesting one. Price of low-end rental homes skyrocketed more than higher-end homes. That is an interesting observation. We've made it sort of in a sideways glance way here on the show, but I want to discuss why that is, because I think it's critical. Now, a lot of folks out there are, we hear the data about how many luxury homes are being built. I'm always looking at what's going on in various markets. I just came across a property that's for sale in San Jose that's got 4 homes on a over half-acre lot right in the middle of Silicon Valley. They want $9 million for it. It doesn't even vaguely pencil out, right? If you put down 20% on that bad boy, your monthly mortgage payment and everything else, everything, is about $39,000. Right? So that means in order for you to simply make $1,000 a month, you need to be charging at least $10,000 a month for each one of those houses. Not going to happen. Ever. Just not. Right? So they're not going to sell that as an investment. I mean, maybe it's actually like a gated community with little streets in it. And there's actually an HOA fee to maintain stuff, but it's an owned thing. So they may sell them as individual properties. But even then, at $9 million, it implies that each one of those things is going to go for $3+ million. Well, no. Like $2.5 million? Not going to happen. Not going to happen. So no matter how you slice it, that doesn't make sense, right? But I'll tell you what, I do come across properties where that does pencil out, even here in Santa Clara County. Okay, so why am I going there? I was trying to demonstrate the high end. The high end is weak. Buying a high-end home and trying to rent it, and this is true in most markets, isn't going to fly here. It just isn't going to fly. Unless you buy a home that becomes a high-end home after you've owned it for a long time. Like my home, for instance, would be positive cash flow. At the price point it currently would sell, it would be considered a high-end home. But the downside, as we discussed before, is now I'm stuck with crap tons of equity in a home where my return on investment for the money, for the equity I have in the property, is horrible, right? In this, you're lucky if you get 5% return on investment on an awful lot of the properties here in Silicon Valley. Now, the reason why investors will tolerate that low return is because of appreciation of the property, on the assumption that will happen. And back in 2004 and 2005, earlier than that, 2003, I was preaching to my clients not to get overly burdened because there was no guarantee that all these properties were going to just keep going up and up and up. Now, over decades, sure, if you're measuring time by decades, but we don't live by decades. But if you're measuring it year to year, there can always be a segment of years ranging from a year to 5 where it's a bad thing, right? You don't end up making the money. And an awful lot of clients who burden themselves, like 110% on these properties, were really hating life when the downturn came. Okay, so why is this a thing? Think about what's been getting constructed lately, right? We've really only had 2 types of homes getting built. Excuse me, with a few exceptions, right? But in general, and again, we've talked about this a ton, luxury homes, simply because the return on these properties was the best for builders. We've talked about all the regulations that have really drawn builders more towards that end of the market, that spectrum of the market, to recoup those things. And multifamily. So think about that for a second. For those of you who live in Silicon Valley, in South San Jose along the 85, there have been 4 or 5 giant developments of apartments and older multifamily construction. Another one just went up in Gilroy. That style of, and these things are like freaking compounds. They're gigantic. They're like 9 stories, just elbow to elbow. I mean, the living there must be as stressful as any job. So why would low-end rental homes be skyrocketing? Because they are higher on the desirability scale than what is being made available in terms of the multifamilies. Now, I'm speaking from a perspective of a real estate guy in the southern Silicon Valley area who serves kind of everything going up to just the bottom tip of the bay, so right up to Sunnyvale, over to Milpitas, maybe. Not a huge fan of Milpitas, but over to Milpitas, maybe over to, say, Mountain View. I dig Mountain View, great city. Love Los Gatos, great city. And that's sort of the reason why I think this is the case. It's because they see the multifamily options that are available, and instead of thinking that, that we'll come up with some extra little amount to make that move into the single family residential space. I honestly think that's what's going on. Now, according to the article here from Housing Wire, single family rental prices continued to rise throughout 2019. In LA, God, what was the... Yeah, I've got another article. LA's rent rose 65% over the last decade, which is kind of nuts. Sweeping rent control bill will take effect in California, capping yearly rent increases at 5% plus inflation and requiring just cause for eviction. So California is becoming a much more hostile environment for landlords. And maybe folks don't get it. I realize that a lot of folks want to portray landlords and property owners as these evil folks who want to do mean things. And all they really want is someone who will move into their property, pay their rent on time, and not abuse the hell out of the place. I've never come across a landlord who has this kind of vindictive streak that wants to twirl the mustache and make your life miserable. Nobody wants to evict a tenant. This isn't the go-to thing. What they want is a tenant who simply pays their bills. What a lot of folks ignore is the amount of abuse that happens to a rental property by tenants. Way more often than not. And again, these are interactions I have with an awful lot of folks, particularly after I advise them to be far more careful on how they choose their tenants, or they come to me after they have a bad tenant and they want to get some advice. In terms of bad actors, the focus should be on tenants, right? When tenants do bad things, when they break a written agreement. I mean, basically a lot of these laws that are going on in California are putting power in the hands of folks where they shouldn't be. Now, is there a problem if someone has been an amazing renter for, say, 10 years and the home changes hands and the new owner wants to raise the rent because of the crazy appreciation that's happened and how much it cost them to buy the place? They need to raise the rent, and they know that the market rent's higher. Now, what do you do in that scenario? Well, I get that that's a thing, but that's the downside of being a tenant, right? I think that maybe there needs to be an agreement in place with the tenant prior to close of escrow. There can be some sort of meeting of the minds thing that's required in the middle of that. But by and large, for investors, California is not a hugely friendly place. Let's see. Last decade for LA renters, the new protections appear akin to putting a Band-Aid on a bullet wound, according to a new study from listing service Rent Cafe. Let's see. Found that the average rent in the city of Los Angeles has ballooned to $2,527. That's a 65% increase since 2010. Significantly higher than the national average rent increase of 36% over the same period of time. So rents are going up there, but the focus here, and I'll include a link to this article if you want to read the whole thing. It's very LA focused, and that's not really where I want to go with this. Going back to what we were talking about relating to the article on single family rentals getting more expensive broadly, with it being the low end rather than the high end. Low end rent prices went up 3.6%, while high end price gains rose 2.9%. And that's another super interesting number to note. Because there's just less happening, and it makes sense, right? There's less happening at that higher end. There are fewer people who can afford things at that higher end. But also the higher end is where we're continuing to see price stagnation in terms of growth. We're also starting to see more prices being reduced at that end. I'm seeing an awful lot of listings for properties where the prices have been reduced. in the last couple of weeks. This is typically a time of year when that tends to happen. There's some evaluation maybe that goes on to figure out if pricing was right to begin with, but it's a thing. So the reason for this, the takeaway I'm trying to give you is if you are a starting investor or an existing investor, lower end single family residential's desirability is way up. And I realize a lot, and here's the other thing, these do not equal properties that are in riskier neighborhoods. Now, for those who've been listening for a while, you know one of the first things I do is check crime rates in various areas. I'm willing to go up to average, but I'm not interested in going into a demilitarized zone. And it also, when I start to get really serious about a property, I'll look into what kind of crimes are we talking about. Frequently, if it's an area where you're seeing domestic disputes or those kinds of calls, maybe I'm not so worried about that, but I am worried about habitual breaking into cars, those kinds of things. That's just stuff I don't want my tenants having to deal with, and it breeds a scenario where the first thought when someone gets their car broken into when it's in their driveway is we got to move, right? So it's about creating an environment that your tenants want, but you can't control the neighborhood, right? The neighborhood's going to be what the neighborhood's going to be, but you can make the smart decision whether you sign on to that or not. Okay, and again, something I've talked about before that I actually think I'll probably do one. I say these things and then I don't do it. I like the idea of doing a deep dive into a specific city where I can walk you through looking for a property. And, I came across one actually in Santa Clara County that I thought actually looked pretty good. So maybe we'll do that one sometime over the next few days. Things have been absolutely nuts over the last week, believe it or not, despite the fact it was Christmas week. I had some folks freaking out. I have some investor clients worrying about tax stuff. Today's the 31st, so there's no more time to do anything. So everybody has stopped calling. So that's a good thing. Now, October saw a national rent increase of 3.1% compared to the 2.9% increase in October of 2018. Overall year-over-year rent price increase have slowed since February of 2016, despite a constant climb throughout the decade. Rent price increases peaked at 4% in February of 2016, but stabilized not until early 2019 at around 3%. Again, this is a seasonal thing. So I have noticed that when we are at those months, right after the first quarter, April, May, June, rents start to go up. If you're coming up with a strategy, when's the sweet spot to find a rental? Right now, right? Starting back in November and right now is the time you want to shop for a rental. I saw prices that were a good $500 a month lower than typical for the neighborhood where the house was and for the configuration of the home. So if that's something you're looking to do, and for those of you who are looking to house hack, right? Like I'm in that scenario. I want to sell my place, take all my equity out, and then buy an investment property. I'm willing to do a duplex, a quad, live in one of the units, live in it for a few years, buy another property, move on, keep doing that, and rinse and repeat. And one option for me is to sell at the peak, rent a place until it's not the peak for rent a home until we hit a time in the marketplace when prices tend to be lower and then buy. Or just rent a house and then keep searching until I find that perfect deal so I don't have the stress of finding something that coincides when my escrow will close. It just means you have to have a high tolerance for moving. I'm not sure I do, but given the amount of money that can be made doing it that way, I think it pays for itself, something you might want to consider. According to this, let's see. October was the 66th consecutive month that low-end rentals saw national rent growth. Phoenix and Phoenix is another market we've talked about a ton. Phoenix was the market that saw the highest uptick in rent with the highest year-over-year increase in single-family rents at 6.8% in October. Many other markets hovered around 2%. So maybe, we've talked a ton about Phoenix, and not just about Phoenix, but surrounding communities in Phoenix. It's on my short list. I am up on Realtor.com where I have lists. And now there's a new thing. I don't know if I mentioned this. There's a new feature that I have through my MLS that leverages off of the national coverage of Realtor.com and lets me, from my MLS tool, do a search anywhere in the country. So for me, as someone who's investment minded, that's awesome. I'm going to I haven't really delved into it because I've been using Realtor.com with pretty good success in terms of getting information. But I want to see if it gives me access to the behind the scenes info. There is information that is not available on Realtor.com or Zillow or Trulia or Redfin that is only visible to licensed real estate agents, at least in California. I don't know if it's true of the country at large. I'm sure it is. So I'm hot to kind of see what that is. So now let's go ahead and jump in. Finally get into the meat here. What are some expectations for 2020? Now, again, this is from Calculated Risk blog. I will put a link to this in the show notes for today's show. It appears house prices as measured by the National Repeat Sales Index, Case-Shiller and CoreLogic, will be up around 3.5% in 2019, down from close to 5% year over year in November of 2018. In 2020, what we're expecting to see is... I don't know if I want to cut to the chase just yet. Maybe we hit a couple of more pieces of data. The price increases in 2019 were lower than in 2018. So we are seeing some slowing, and that's something we predicted here on the show. It just made sense. Nothing that you needed to wickedly concern yourself about. It wasn't a decrease. It was just a slow in the increase, right? So we're still positive numbers in terms of increases. We're just not doing it at the crazy rates that we've seen over the past couple of years. Year over year, so the index Case-Shiller through September indicated up 2.1%. This is for price changes on properties, not rent increases. So 2.1 increase. Case-Shiller National as of September 19th was 3.2%. CoreLogic saw it at 3.5% as of October 18th. FHFA purchase only Freddie Mac September 18th, 5.1%. So what we expect, what I expect and what they expect is that inventories are probably going to not jump a lot in 2020. We are seeing some interesting things that might indicate there's more construction going on, but nothing that is statistically significant compared to the same time last year. So in terms of new construction, not seeing a whole lot there, although we are seeing some increased numbers in the number of new homes that are getting sold. Inventory remains close to the same level. It seems likely that the price appreciation will increase from the 2019 pace to the mid-single digits. So in terms of what to expect, I think we'll see price increases again, but we're going to see them kind of in the same vein as we've been seeing them. We're not going to see 8%, 9%, 10%. We're going to see 3 to 5%, I think, is probably the reasonable expectation in terms of price increases over the next year. So nothing crazy. It's also going to depend on your market and the sub-markets within your markets. I know that that's still very true here. I actually had one of my neighbors just sell their house, and it's a perfect example of a home that is in that higher end market because of its location. It's newer construction. I mean, I live in a community where most of the homes were built in the 70s. But it was one of these homes that just was bizarre. The layout was very weird. It's one of those homes difficult to describe, right? So it was very terraced, meaning you had little stairs going up to a bunch of little terraces within the home. And it was just bizarre. And it had this one little room. It was a room, but it was an alcove. It didn't have a door. You could step into it, and there were these little windows you could peek out of if you got up on your tiptoes. Just no explanation for what that space is for. It would make a lot of sense in a bunker somewhere if you needed to peek outside to see who was charging you, but just didn't make any sense in the house. So while it was a beautiful new home, it was just the layout was really working against it. And it was a custom home, so I don't know who designed that thing, but it finally sold, but it sold for, I think it sold for like $200,000 below its original asking price, still over $1 million, but not anywhere near where they were hoping to get it. And another thing that's very telling about that property is it sells super frequently. I mean, or it goes on the market super frequently. I've lived in this home since 2005, and I think that home has sold 3 times. I know they tried to sell it probably twice that. Went on the market maybe 6 or 7 times. But it has only sold maybe 4 times. That just doesn't happen in this community. We've had 3 homes sell on this street in the last year. 2 of them had been here for decades. The folks who just sold in the home I was just describing they'd only been here for 4 years, 3 years, not long. So very unusual. This is a market where you just can't make it work as an investment. There's an HOA here. I don't know. There's one thing I consider doing. My house is big enough that I could actually make my first floor an income unit if I wanted to. It's got enough square footage. I'd have to put up some walls and do some things, maybe add a door for exterior access. I haven't really taken the next steps, but you could make it work if you were someone who wanted to get an income suite happening on your higher end home. Now, my top floor would still be a 3-bed, 2-bath home. The bottom would be a 1 bedroom with a living room and a bathroom and laundry. No kitchen to speak of, so one of those rooms would kind of have to we'd have to figure out a way to turn that into a kitchenette. But these are all things you should think about, right? I think it's always good to think, even in the home you're going to buy, if I really needed to or wanted to, how could I turn this into something that generates some income for me? And in my case, I'd need to talk to my HOA first and see if that's something that I could do. You'd want to do the same. If you're looking to purchase a home, these are questions you need to ask of the HOA, or at least review the current regulations for the HOA to verify it's something you can do. Okay. So that's calculated risks projection. I think it's a super reasonable one. Don't expect a ton of growth, but don't expect a decline. We are not going to see property values go down in the higher level assessment of real estate. Some submarkets may have this happen where you're going to see property values go down a little bit in those, but I can't address submarkets. So it's super important for you to do your own homework and focus on your level of interest in your local markets to figure out what's going on. And you may find yourself in a position where it may go down, but you know the community well enough to know that's just going to be a blip. Or if it does go down unexpectedly, that might be your opportunity to jump in and make something good happen for your investments. Just always be aware of the strength of the rental market. As I've suggested before, there's a variety of ways to do that. I track rentals in the neighborhoods I'm super interested in. I track rental properties via Trulia primarily. And when I see a home come up that's sexy, I'll put it in my spreadsheet. I'll put the date, how many days, I'll calculate how many days it's been on Trulia. I usually do this twice a week. Tuesdays and Thursdays are frequently the day I do it. I'll probably do it right after I finish up this show. I track them, and then I note when they disappear. And you can usually note that and figure out when it happened. And if worse comes to worse, you can also, when I note the spreadsheet info for that rental, I'll also put down the contact info for the landlord if it's available. And if I really need to know more data, I'll call up that landlord and I'll go, hey, did you just take that off the market or did it rent? And find out. They usually won't tell me what it rented for, but you can usually, rentals, in my marketplace, you're not really hearing people negotiate down rental rates. So anyway, I hope that's been valuable for you folks as we head into the new year. Probably the month of January is going to be focused on sort of these projections and what other folks are saying. I'm sure we'll throw in some other stuff. If you would like to follow me or get more inside info from me, you can do that over at therebelbroker.com, or you can text the word Rebel Broker to the number 44222. That's text the word Rebel Broker to the number 44222 to join the Rebel Underground and get the inside scoop. All right, folks, as always, the goal is to leave you with more information on the table than you invested in time. Hope we've done that today. Thanks again for listening. We'll talk to y'all next time.